reported an operationally weak quarter. Both their NI and NI miss was about 2%, while the PAT miss was about 5.2%. The deposit growth was 11.2%. The weakest that you are seeing in last 11 quarters, and the loan growth came in at 13.5%, which was one of the weakest that you are seeing in last 14 quarters. So there was pressure on the net interest margin to hold. They hold NII by 2% and PAT miss was about 5%. Provisions spiked up over here. The fact that asset quality has improved and slippages were lower than the previous quarter. So overall, 14 quarter low NII growth. PAT declined by %, the highest decline that you are seeing in last 35 quarters. So operationally,
right, Abhishek. Now do stay on with us. The other big number that the industry will be watching closely has been SBI. Now SBI has reported a beat. Q4 FY25 earnings, net profit at 18,604 rupees, while the net interest income came in at 42,774 crores. Now it has beaten the street's expectations. The bank's asset quality has also improved. The gross NPA ratio 0.8% and the net NPA ratio was at 0.47%. Abhishek, coming back to you again, a beat on expectations. Performer.
SBI is number. Take a look at the NI. The NI beat was about 0.7%, while the PAT beat was about more %. That's thanks to other income, wherein the forex income increased massively on a sequential basis, and that led to the PAT beat. Overall, good set of numbers coming in. With respect to the business momentum, deposit growth was at 9.5% YOY and about 2.9% sequentially. The loan growth was slightly below the numbers that analysts were working with. It came in at 12% YOY and 8% sequentially. However, take a look at the asset quality, one of the best that you are seeing in last 10 years or even more. Gross NPA ratio has improved to 1.82 versus 2.07, while the net NPA has improved to 0.47 versus 0.53%. The slippages were curtailed at 0.4% and for the bank in this quarter. The write-offs were on the higher side, so need clarity from the management. The write-offs were at 10,000 crore, and that is why if you take a look, the provisions spiked up despite the slippages not much higher. Additionally, a good quarter for SBI. Back to you.
Right, Abhishek, thanks so much for that. But staying with the earnings season, Cognizant a steady set of Q1 that's for FY25. Its guidance, company's top brass said that 20% of its code is presently written by machines, and this could rise to as much as 50%. The top brass also expects the focus to shift from services to embedding technology in products. Here is the conversation with CNBC-TV18's Reema Tendulkar had with the management.
Thank you, Reema. Thank you for having us on the show today. It's a very time, and it's also very complex for our clients. Some sectors it is more complex and more uncertain, in some sectors it is not. But effectively, when you have uncertainties, technology can be leveraged for productivity, efficiency, and creating opportunities for clients to thrive in the uncertainty, and sometimes underwrite that money for innovation purposes.
Ravi, we know the first order impact of the tariffs is on sectors like manufacturing, particularly auto, the consumer retail sector, travel, tourism, logistics. These sectors are feeling the heat. But is there a risk that the second order impact, which is on other sectors like BFSI, which is so far very resilient, that will come into play? I mean, are you preparing? I mean, are your clients worried about that? And where is it that we've seen, deal cancellation or deal pauses?
We haven't seen deal cancellations so far. We have, we've had a very resilient quarter. I would say there is going to be second order impact if there is uncertainty. I mean, even if there is one sector which gets impacted, financial services will have downstream impact, and there is going to be consumer spend, which is an important metric for financial services. If you look at software development cycles, I think the industry is going to shrink, because software software is going to be written by machines. One of the other pillars which is excited about is engineering. The last technology was deeply immersed into services industries. Next 10 years, I actually believe technology will be immersed into anything physical, making physical autonomous connected. That will lead to more technology. Now, if software by machines, elasticity of spend on software actually drive more.
What your code generative AI, and what is the generative contribution to your revenues?
Today we have more than 20%, a little over of our codes written by generative AI. We haven't broken down but every large deal that we have of Gen AI, and since it is, we haven't really broken it out as $1 or 50 million or which is coming out of the Gen AI number for the quarter. From a long, we are very focused on Gen AI and the that it provides, specifically in the three vectors we have talked about on our investor day. Vector 1, which is productivity, Vector 2 is AI-enabled services, and Vector 3 is really about the new addressable market we have not looked at as IT services before. So the whole investments around that is the focus for long term. And in the current times where the focus is around cost, the maximum bang for a buck for what can we do to remain. So this is what we focused on, and we the growth comes.
If I may add, in fact, has spoken about machines writing 20% of our. This in my earnings this time. I mentioned this in my earnings last time, and I mentioned lines of code. On the third quarter of last year. So we are industrializing this opportunity. Every new school graduate who joins us is not going to look at writing code in legacy.
Continue to do, and I'll come back to this one. Now, along that way, last year there were some kind of external events that affected us quite significantly. The first one, of course, was the technology embargo, which all of you knew quite well. April 24th, the embargo was placed upon us. It obviously took a lot of our resources, management bandwidth, and stuff like that to work through the issues of embargo. Very, very, very pleased to say that working very closely with the working very closely, internal and external, we managed to clear and lift the embargo before the end of the year. In fact, lift the embargo sometime in February of 2025. That was a huge kind of burden, so to speak, off our back. The second thing that's happened at an industry level, and you've seen a lot of industry players talk about it, the microfinance industry has gone through a very difficult, extremely difficult time. Situation of extreme over leveraging. Now, our book was always about 10,000, which is roughly 2.5% of our total assets. We worked very diligently to bring that book down, manage it. We brought it down by 33% on a year-on-year, and today it's only about 1% of our net advances. But the cost of the microfinance industry, so to speak, has had a pretty profound impact on our results for FY25. And the third event, which really kind of came about, over leveraging of even the urban customer, which showed up in our business and personal loan business, and we saw that in the mid of last year and then evened it out. In fact, personal loans now is absolutely fine. It remains a little bit elevated, but hopefully should start coming down. So despite all of these kind of external events, these kind of things which we had not planned on, we stayed true to what we were really trying to do. We even the embargo that other businesses will continue business as usual. Obviously, the heavy lifting will be done by the corporate and the wholesale side of the bank. And so despite all of this, we were able to grow on an average basis advances by about 16%, very much in line with our philosophy of growing about 1.5 to 2 times normal growth. Deposits grew nicely as well, and our CASA ratio at 43%. With all these other difficult situations, we did wins in the capital markets. And I've always said that Kotak is like a plane that flies on 4 engines. So if one engine is having a little bit of difficulty, the other 3 engines keep us soaring. And our capital markets business and our asset management business did really, really, really well through the year. Our investment capital institutional equities soaring. AMC did exceptionally well. So very, very strong performance on all of this kind of put together. We were able to grow the book value per share, which is what I actually measure myself and my team on, because ultimately whatever pricing is given by the market is the pricing given by the market. If the book value of the share is growing, that is a good thing. And during the year, we grew book value by 21%. Now, of course, I'll get Devang to help and take us through all the financials. Strategically, our north still to get customer centric. And in that context, I wanted to talk to you about a few things. I hope that, I think one of the biggest things we did was launch the group brand campaign. This was the first time that we brought all of the group together under one unifying brand. Rohit is here. Rohit is the father of this entire campaign. Done a fabulous job. I hope you guys have seen our ads, which come under the tagline of "Hausla hai to ho jayega." And we really believe as a company, and we really believe as employees of the company, that that is true. And that is true for our customers, that is true for us. And therefore, it's not surprising that the brand campaign actually has been very strong. And now you will see us roll out with that theme across other parts of the group, including the bank, as to how we make Hausla Hai really, really come alive. The second thing which I'm really is, yes, we were in technology embargo. Use that time under the technology embargo to really strengthen our digital offerings. So come out of the technology embargo, we will come out much, much, much stronger. And I think that is kind of depicted the strong new mobile banking app that we've launched for our affluent customers, and then the 811 app which we've launched for our core India customers. If you've not tried those, I recommend, because the user experience and the user latency and the way get things done is actually quite amazing. We will continue to grow on this and hope very good kind of results. The third thing I want to talk about is really about how much time and effort we put into really making our colleagues, helping our colleagues deliver for our customers. So we use technology to really help our frontline colleagues free up their time, make their life easier so that they can serve the customers in a much, much, much better fashion. More to be done, work in progress, but I'm very pleased with the progress that we are making, because this makes our frontline colleagues have the time and the energy to really spend time with our customers. And finally, what I'm super excited about, and actually we've just soft launched, is our targeted offering towards the affluent customer. Now, as of you all know, our private bank is about the best private bank in the country, we've come out with a specialized offering for the target customer just below the private bank. Our private bank cuts off at about 8.5 crores. We're saying for customers, 1 crore to 8.5 crores, our segmented offering called Solitaire. And Solitaire really brings all the best of Kotak together, including a fabulous Solitaire credit card for our customers. We've just soft launched Solitaire, and as we kind of go along, we'll report our progress on Solitaire. But as a team, we are very excited about Solitaire. So as we move into 2026, our strategy won't change, our focus on execution won't change. That is what we really want to get done, and we'll do much more of that. But we are also mindful of the external environment. I mean, clearly, President Trump and the tariffs is something much on our mind, and how we're monitoring the economy, monitoring our very, very closely to see whether there's any impact. Thankfully, nothing as yet, but monitoring it very closely. And then, of course, geopolitical kind of issues closer home, which obviously have to monitor. Otherwise, it's all systems go. We will make Kotak into a customer-centric company. We will make our customers proud of us, and that should relate into great results for us and our shareholders as well as our regulators. It's been quite the year going in excited, and we'll keep going on this journey. With this, let me hand over to Devang, who can walk us through the numbers for the last year.
Thank you, Ashok, and good afternoon, friends. As Ashok mentioned, this has been a very eventful year, right? But I think one of the things which we have not compromised is on the clearly the risk, prudence, compliance, and governance principle for which Kotak is always known for. And our objective is to obviously transform this organization with scale, keeping in mind the customer centricity. With this, I will come to the financial performance, which was sort of adopted by the board today morning. Let me start with the consolidated numbers. Consolidated PAT for increased by at 22,126 crore. This, of course, includes gain on divestment of KGI. And if I exclude the gain on KGI, it is 19,113 crores, which is up 5% YOY. Consolidated PAT for Q4 was 4,933 crores. Consolidated customer assets actually grew 12% YOY to 5,37,000 crores as at March 25. Consolidated ROA, which is the return on asset, is 2.36, same as on an annualized basis. Consolidated ROE, return on equity, is about 13.12%, and for Q4/25, it is at 12.9%. Consolidated capital adequacy as per Basel III as at March 31st is 23.3 and a very, very comfortable CET1 ratio of 22.3 at the consolidated level. Consolidated net worth at March for the group at 57,395 crores. The book value, Ashok mentioned, which is the barometer for the performance, at March 31st was 792, which is 20% up on a YOY basis. With this, let me start with the entities. The PAT for the financial year 25 increased 19% YOY, 15,450 crores, including the gain of divestment of KGI. And if we exclude such gain, the PAT is 720 crores. PAT for the Q4 was 3,052 crores. Net interest margin for the bank was 4.96% for the full year and 4.97% for the quarter ended March 20. Based on an EOP basis at 30 at 4,44,000. However, if I look at the average advances growth, it was 18% for the full year. Secured, which is where we had a bit of concerns, retail microcredit. as a percentage of total net advances stood at about 10.5% as at 31st March 2025. Average total deposit grew to 4,68,486 crore for Q4, 15% on a YOY basis. Average 25, 16% on a YOY. CASA ratio at 31st March is at 43%, and sweep balance, which is we call also grew percent basis, now stands at 55,000 crores. Credit to deposit ratio, the CD ratio at 31st March is stable at 85.5%. At 31st March 25, the gross NPA ratio was 1.40% and net NPA ratio was 0.31%. Provision coverage ratio stood at about 78%. Capital adequacy at the bank also very comfortable. Total capital 22.2%, of which CET1 was 21.1%. Bank ROA is 1, and for the quarter annualized, it is at 2.19%. Standard ROE for FY25 was 12.57%. To the subsidiaries performance, the subsidiaries in the market and the business, and actually that also demonstrates the strength of our conglomerate. And non-banking entities contribute 29% to the group. Specifically, record full year profit 1,640 crores, up 34% on a YOY basis. Kotak AMC and Kotak Trusteeship Company recorded a profit of 977 crores, up 86% YOY growth, with 49% YOY increase in the equity average AUM to 3 lakh crores. Kotak Mahindra Capital Company, which is the investment banking, full year profit again 68% on a YOY basis at 361 crore rupees. Kotak Prime, which is primarily into car finance company, its assets grew at 16% at 40,123 crores. Profit PAT for the Q4 was 297 crores, up 34% YOY, and for full year it was 1,015 crores, up 14%. Kotak Life, which is business, quarter PAT was 73 crores with full year PAT of 769 crores. Kotak Life to maintain healthy solvency 2.x, which is much beyond requirement of 1. Embedded value of the Kotak Life business grew 16% to 17,600. The board of directors recommended a dividend of 2 rupees 50 paisa per equity share, having face value of 5 for the year ended 31st March 2025. Of course, this is subject to approval at the shareholder at the AGM. Thank you very much.
Thank you, Ashok, and thank you, Dev. With that, we will commence the Q&A session. But before we do that, a few points to be noted. We'll obviously questions on a first-come basis. And since we have participants online, please use the raise hand feature to be noticed, and the team will flag those questions to us. For those of you present in the room, you can also use the raise hand feature. Come to one. That's point one. I know the raise hand means everyone goes up at the same time, but we'll try a bit. Right. Yeah, we'll do that the next time. Good feedback. Also, there's the Kotak team around the room, so if you guys can raise your hands first to be identified. Yeah, so they're going to be the ones that are going to get you the mic, so be nice to them. All right, let me start with the questions, and the first one, I think we'll start with Saloni because you just raised your hand first. Over to you.
Yeah, hi. Hi, this is Saloni Shukla from the Economic Times. Thank you for taking this question. So this quarter looks challenging for the bank. The PAT has been down. If the entire advances growth, we have seen retail microcredit, which is down, credit card is down. How do you quantify this? Provisions are up, 245%. Can you just sort of briefly, what are the challenges that you faced and, led to the PAT decline?
Sure. I'll make some comments and then I'll ask Devang. But fundamentally, look, the microfinance business has gone through a very tough, and so the microfinance business is what has contributed to the higher losses, and the microfinance business obviously run down the book. But if you take the microfinance business out of it, the bank has grown really well. All the subsidiaries have done really, really. We couldn't grow the cards book because we were under embargo. That only started very recently. The personal loan book grew well because of the Standard Chartered kind of acquisition. So microfinance, it's been really, really good. Microfinance has really been a story of an industry issue where the microfinance industry has taken a kind of beating. I don't know, Devang, anything to add?
Hi, Saloni. Saloni, if you actually look at the some of the parameters like NIM has actually improved in the last quarter. If you look at some of the credit parameters, okay, the slippage has actually improved. It is reducing. If you look at the credit cost, it has actually come down. Okay, so I think what you are saying is right in terms of absolute quantum of the profit. But if you compare with the last year, if you are doing a YOY basis, just be careful because in last quarter of the last year, we had quite a few one-off items and we have mentioned that as a part of the investor update. Almost over 426 crore worth of PAT, a one-off item which was there. So when you are looking at a YOY basis, maybe that is the right what you are having. But if I look at the health of the parameters, if I look at the NIM, if I look at the NPA ratios, I think directionally it is improving over the sequential quarters.
So I have one more question for...
Can I just address the asset growth that you talked about? I think if you look at the asset growth that we came out with, the consumer bank continued to grow. The commercial bank ex-microfinance continued to grow, whether it was tractors had a strong quarter and so did. I think some of the wholesale businesses, because of the extremely competitive pricing, some of the short-term advances, sort of reduced. But what we did was we turned to build the credit substitutes book, which was commercial paper and bonds, etc., where we expected because of the interest rate and liquidity a rally, and that's exactly what happened. So if you looked at it, consumer and commercial continue to grow. Devang, 13 price. We let go of that business and focused on credit substitutes. That's just for you.
Sir, on the challenging aspects, like for example, microfinance unsecured, can you spell out, the concerns plateauing, stable on ground?
So, like I said, personal loans actually we are seeing down. Credit cards has definitely plateaued. I'm saying this for a while. Microfinance, honestly, continues to be stressed. Now, our book quite dramatically. Our book was about 10,000 crores. Today it's down to about 600 crores. So our book has come down dramatically. You've seen slippages come down. So we may see some elevation into Q1 or whatever. But after that, I expect to see some kind of relief.
Thanks. We'll move on to the next question, which is from Subhana Sheikh, NDTV Profit.
I'll take the mic.
Hi, sir. So I wanted to ask about your that improved slightly in the this quarter. If you could help us provide a guidance, So if you could provide us a guidance on that, then I'll ask my second question.
The NIM for the quarter actually improved also because of one is the right. You slabs 3 and 3.5%. So that second account balance was high in the Q4. Coming to the NIM going forward, the NIM has two components. quite comfortable. Secured mix of the advances improve with the comfort you have. You will see some yield, right? Of course, I cut all hard and it will happen. On the cost, the other now 25. Other thing which we have, as you know, it is lesser. So the repricing is also much faster. So there also we are reducing the rate of interest what we pay money. And as we have seen, like other players are already reducing the rate on the term deposit. Have sort of started rationalizing time buckets which we have. So I think because the effects on a portfolio temporary match, repricing repricing period is much shorter. We expect to faster manner. But yes, for a short term, there will be on the name. It's the same. Went up, we got the advantage. Right? The last quarter of 24, our NIM was as high as 5.32%. Right? Before it goes, I think the good.
So my second question to Mr. Corporate book has grown, but on a basis when we see the previous quarter, you're also saying your external environment. Are you going to see some your banking, corporate banking book?
Said that the consumer and the commercial are growing.
Yeah.
The corporate, because of the company, and we sort of the credit substitutes. As of now, the way we growth in the environment, any transaction, as yet, and remain seen. Largely it will be macro realization about the geopolitical tension. So we don't expect that to happen. We're not signs of it. As we look at strategy on the asset side, like I said, consumer, which is the secured side, mortgages, business banking, credit cards, personal loans, remain core to our customer strategy. Our commercial vehicles, tractors, agri, and our SME businesses, all three SME businesses are core. Right? Even on the corporate side, the corporate SME is doing very well. In fact, it grew, significantly in this quarter and by 31%. So we're clear about where we are focused. On the wholesale side, transaction banking is very core to our customer. That will continue to grow.
Thanks, Shanti. The next question is from, if you can pass the mic to Hamsini, who's just next to you.
Hi, thank you. Before I start my questions, I have like 2-3 clarifications. What would be your CET ratio for the year end? Had it minus the sale from GI, what would the number have looked like, sir? And from a line item perspective, I see that you've moved MFI business from consumer to commercial banking. Is there any rationale? It's part of consumer.
Part of the always to Bharat, right? So all the Bharat business sits within commercial banking. Yes, under.
Thank you. I'll get that you mind business from the perspective of growth. FY26 assume the business in full force.
We've always mentioned, that we would like to have our unsecured businesses running at about mid-teens of our total book. Now during the embargo and because of balance slipped 0.7%, but now that we are back, all number. goal. Advances go up, go to assets.
Okay. Can I?
No, one last question. Mr. Vaswani, you fully. One full FY25, we've seen little flat. NII growth has also been. Provisions have sort of doubled from where you took charge. Would it be fair to call FY as a year of kitchen sinking and, you know, wherever balance sheet that, and 6 is a year of growth for Kotak Mahindra Bank?
I wish that was true. I've always told you. I told you on day one and I'm telling you today. I'm not here for a day. I'm not here for a quarter. And the is that right, the situation, and you know, as per the industry, it will escape. Again, the overthink. So there's no question of trying to kitchen saying anything like that. There is in reality. We're committed to building the business. We put a strategy. We'll continue to execute against that strategy and this growth our customers.
Target for sir on a growth basis.
Obviously, we've got internal budget like that. Having 26 fair amount of things up in the starting with repo rate. What happens with repo? Are there going to be 3 cuts? When do the cuts happen? All of this, of course, has a profound impact on our business. Then, you know, a lot of both, like I said, you know, as well as on borders. So it's difficult that I will try and grow. We've always said that we will grow on 1.5 GDP, right? Because we're students, we don't want boys or anything like that. Strategy, we'll continue to execute against that strategy step by step. Even in a difficult quarter, like last quarter was a difficult quarter, we didn't hold back going out to the brand campaign. Right? Such an easy to hold back. We are not here for quarter. We are here for a phenomenal franchise for our customers, and we will continue down that 2 years, 3 years, as long as we.
Just to answer the question, I mentally calculated. The microfinance, if you see, analyze the decline started after H1, September, October, much after the year has passed through. Yeah,
Thanks,
thank you.
Devan. Questions from Piyush Shukla from HBL.
So what's your guidance on loan and deposit growth for FY26?
Yeah, that's what I mentioned, right? That asset growth will go at about 1-2 times nominal GDP growth, and we show the 85 to 87%. Work backward and say growth.
So just market share, you had mentioned up number 2030 is the plan towards it. Also, any of them are headed for listing any of.
Look, for the long term, we would in terms of they're in, they're doing exceptional. Don't see anything to share with anybody else. Why wouldn't we keep it for ourselves?
Thanks.
Actually, it's the
With
other
a
way around.
capital adequacy of 23%, why would we want to list?
Invest in us.
By buying Kotak share, you are actually buying all the subsidiary share as well, because they are all 100% subsidiaries.
Thanks.
That's the beauty of a model.
Yeah, we'll move to Siddhi Nayak from Reuters.
Hi, good afternoon. My question was like a continuation from what Hamsini asked. How soon do you think you can, get back the lost market share, especially in the credit card space? I understand that February you were out of the embargo, but is there any, how much time has the bank internally assessed to gain back the market share, and what strategies is the bank doing to get there?
So see, look, the credit card is a business that's built brick by brick by brick by brick, right? So we've got back into the game, and we're going to continue to build the credit card business. It's a business that is very dear to our heart, and we want to kind of grow it. So for example, we've launched that Solitaire credit card. I think that will give us good market share, at least in terms of spend and stuff like that. But it's not going to be, it's not overnight going to suddenly move from 10.5 to 15. It's a brick by brick business, it'll go there. But it's a business we really love, we're investing in it. We're going to spend a lot of time on the strategy and grow it.
I have one thing to add there. Even during the embargo, we did not issue new cards, but we did not dramatically drop down on the spends of the portfolio. So we focused on our existing customers to really look at how can we give them better propositions to improve their spends. And you've seen last year in many banks, the spends have been pretty strong. So it'll be a combination of both our existing customers where we sort of offer better propositions, and the NTBs where we get back into the market and grow our market share.
Okay.
Thanks.
My second is on your that there have been certain price issues as well. Now, given the fact that there's so much uncertainty from the tariffs, etc., what exactly is the out your growth in the corporate segment?
If you look at the corporate, one, they're all deleveraging on cash, and they've all raised equity. So I don't think there are any credit at all. Actually, there's a little down on tariffs. Most companies have 3 years 40 balance sheet. So I don't think that's going to be an impact worry. I think the real question is how many to start aggressively, start to capacity, and get the investment cycle through, which can give the growth. Otherwise, a lot of this is more form and nature than nature.
But on the pricing front, challenges that
in this quarter, on the short-term advances, there were pricing rate drop, the liquidity, and the commercial paper market gave a better yield. So, but that will keep doing it. We are very clear. We are here to look at a customer level, and look at building our business model, and not just not put assets for the sake of assets. But I still think there are opportunities, and for us, the middle market in the we look at they're very solid.
But the middle market is also becoming very competitive. Trying to tap that.
Actually, it is the large corporate.
Thank you. We'll move on to the next one from ET now.
Mr. Maswani, my first question is, the RBI had removed the tech embargo and mentioned that that's a big burden off your back. How would the bank leverage on its retail assets? How would that help you in terms of and my second question, that MFI had been a problem for you last year. Now, since you mentioned that you are resolving that issue, I mean, so are you fairly out of the woods, and will MFI that be a drag on the bank's earnings in the coming quarter?
Yeah, on the retail asset book, kind of relaunched our credit card business, our personal businesses. These are all businesses which essentially are digital business, right? Of course, we do some of it through our branches, personal loans, but for these are businesses, and if you don't have a, it becomes to grow. But now that we are out of the embargo, we have kind of restarted and are seeing growth in both personal and we are launched a new in cards. We're going to do much more in credit cards, and I think you'll see that as we get along. Excited about concerned. Like I mentioned, the M was roughly 10,000 crores. We bought it 3% year on year at about 4,500 crores right now. Obviously, much will obviously reduce that. I pain still seeing kind of defaults, and then you have such a difficult situation, then governments step in to make rules and regulations around and stuff like that, which make collectability difficult. We saw a bit of that in Karnataka. We're seeing that now in Tamil Nadu, and that puts refrain on our. But I think we'll be able to glide through this. Maybe it's a quarter or two, and I think we should come out of that business.
All right. Can I take a question online now? Advait from Bloomberg, and I'll read out the question for you. Like other private peers, there is a huge jump in SME lending on an annual and quarterly basis. Plan to increase the size of the book since it's just 8% of finances. Any initiatives planned to grow SME lending?
So, at Kotak, we have SME in first is the small and SME, which businesses around our branches. There is both, and we serve these customers for all needs, personal and professional, and for their companies at the branch level. The second, we have SMEs in the agri basis, which again has done well. And the third is the corporate SME done really well this year. There again, we are very clear. We also for distribution 50% to our branches, and the balance. We, just like Ashok talked about, care for the individual. Also have put together called the business across liabilities for our SME, and we've rolling it out. Focused on self for us, and we are continuing on an order.
Next question is from Abhishek Kotak. Abhishek.
Hi. So what I saw with your deposit growth is a quarter row with respect to the growth rate. Anything on the deposit front that you are taking initiative? What kind of growth? And your average SA balance has declined on a year-on-year basis, while Sir spoke about CA increasing. Historically, what we have seen is we have cut saving rate, faster outgo with respect to saving deposits. Any thoughts over there?
So, number one, of course, very on our CASA strategy. It's not material, but the funds which allows us to kind of compete. So, we are very on our CASA strategy. The way we're trying to build it in is how do we build a differentiated proposition across the group. On the corporate side of the house, we have a very good business in custody, and custody generates very good CA balances for us. It has a strong moat, and we can kind of do very well there. To Shanti's point, we are pushing our corporate very hard, national banking business as well. Our corporate businesses actually we are in, and even in our small portfolio or portfolio together that take into account the entire banking of the SME, right from liabilities to assets, and we've seen good growth in the business banking sits in the consumer house. Down the thing on Core India continues to be something very nice granular deposits. Even though we were in embargo and couldn't get new accounts, 811 actually stabilized and did quite well. Now, out of the embargo, expecting nicely, and in April they grew quite nicely. On the consumer side, the launch of the Solitaire program will give us good SAR growth, and even generally speaking, if you see the average ticket size in the consumer side, it's actually gone up from about 25,000 rupees an account to 45,000 rupees an account. So we are super focused on this area, and we'll look at it. Now, there was a general tightening in the marketplace in the first 2 or 3 quarters of the year. Like with every other bank, we grew as much as the ICICIs and the HDFCs. Q4, there was a release of liquidity. All of the banks grew well. We grew very well as well. So I feel very confident that we can keep pace and continue to grow the CASA deposits.
Abhishek, I want to address your question. Savings, you asked that, right? If you actually see this quarter, we've grown 2% on a quarter-on-quarter basis after a number of quarters. This is in a year when 811 was in embargo. In 811, despite embargo, no acquisitions for almost 11 months, the savings continued to grow. And we're now back in the acquisition game again. Very clear, the core banking customer continues to grow. So when you look at customers with balances of up to 5 or 10 lakh, they continue to grow. It's the upper end customers that move money into liquid funds and other alternatives, and I don't see that trend changing. So very clearly, the focus on savings has been, savings is just what you call, the dollar burger. What you build around the savings, which is either in your cards, in your other products, etc., is really what is going to help you save, increase your savings, whether it's in the individual space and the other spaces. But we are very focused on savings. Actually, Solitaire is one such program, 811 back on the track again, and you will see some more propositions coming from our side. But this quarter, we actually grew savings, the regular savings, QOQ 2%.
Thanks, Shanti. One last question. Your CC was 60 bips in this fiscal versus 40 bips in the previous fiscal. What kind of credit cost do you see going ahead? Would it continue to soften, or do you see the unsecured portfolio that can cause some hiccups?
Yeah, so I think Ashok also alluded, the real credit cost is from the unsecured portfolio. And the unsecured portfolios are in 3 parts. The personal loan portfolio, which we are seeing the delinquencies coming down actually, right? As far as the credit card portfolio is concerned, the delinquencies are not increasing but are remaining stable. And on the microcredit, which is the retail microcredit, where we do see some uplift happening for a quarter or 1 or 2, but after that we hope it will come down with the measures which we have taken. So largely what we are seeing, the contributory to this increase from 0.4 to 0.6 is the unsecured credit. Look, the secured credit is pristine. There is absolutely no clear, right? So once all these 3, businesses which contribute to this, which I explained, we monitor that, we expect the credit cost to remain within the same levels.
Sorry, Abhishek, we'll take this offline because we're really running out of time.
No, so so it can even come down, yeah.
Thank you. Okay, we're going to, conscious of time, we're going to give the last question to Amol Dete. And look, that's making sure that they're going to be around to answer some questions.
Sure. Thank you, Prasanna. Sir, I want you to just explain the AIF part and specifically the private credit. We understand that the Kotak is going very aggressive on that part. You're also planning to raise some $2 billion for that. Private credit. So what kind of demand do you see? What kind of pipeline do you see? Because $2 billion is what you're going to raise, we understand. Yeah. There is one question, sir, and I will also just quickly talk about the second question, which is more on the microfinance. Though you have clarified a lot, my question to you is, what is the lesson that you and specifically the industry has learned? Because after 2 years, there is a similar problem that happens in the microfinance industry. The banks, the NBFCs will over leverage more. Same kinds of problems will happen. The government will question on the recovery and same tactics will happen. So what is the lesson that the banks have learned and how will you deal with these issues going ahead?
Jaideep, you want to talk a little bit about Kamal?
The private credit strategy is what we raising a private credit fund in the in Kotak Mutual Fund, which is the